Good morning, it's Wednesday the 15th of November. Today we're going to be focusing on US inflation and this morning's UK inflation report and what this has meant for market returns. Yesterday the market was solely focused on the latest US inflation report for October. US inflation has been making great progress this year. Last year it peaked at 9%, just over, and it's been coming down gradually throughout the course of the year. And that's thanks in part to higher interest rates, which act as a handbrake on economic activity. Yesterday we saw the inflation rate fall further, coming from 3.7% for headline inflation down to 3.2%. When we look at core inflation, which strips out the more volatile components of food and energy, again we saw inflation moderate further from 4.1% down to 4%. So we're getting ever closer to the Federal Reserve's inflation target of 2%. When we look at the individual components or underlying components, we're seeing falls in oil prices, which has been beneficial, but also used car prices. We're seeing shelter prices and services prices tick up, but at a much slower rate, which is helping to bring down the inflation rate. So why is this important? Well, the market prior to the release was getting ever encouraged that the Federal Reserve would be close to peak interest rates, no longer needing to put up interest rates because of slowing economic growth and improvements on the inflation front. So this US inflation report yesterday helps cement that idea that interest rates in the US will no longer needed to go up. This morning we had UK inflation report. UK inflation has been trending lower this year, but at a slightly slower pace than expected, and especially compared to the US. But we have been making great progress. Inflation last year was over 10%. Prior to the release, it was down at 6.7%. Yesterday, we saw inflation fall, or this morning we saw inflation fall further from 6.7% down to 4.6%. And then when we look at core inflation, that's also trended lower from 6.1% down to 5.7%. Like the US, benefiting from lower oil and gas prices, but the lower prices was more broad-based. We're seeing lower prices in transportation, food, restaurants and hotels, as well as furniture and clothing. So very positive report from the UK as well, and gives the market encouragement that the UK will also be done on raising interest rates further. So how has the market responded? It's responded very well. Yesterday we saw strong returns from equities, US equity market up 1.9%. Small caps, the Russell 2000 up 5.4%, its best day in over a year. But the returns were more broad-based. Global equities in general were up, and we saw strong returns also from European equities and Chinese equities this morning. But for multi-asset investors that are exposed to global bonds, global government bonds that have been more volatile over the last couple of years, we saw strong returns there. So a multi-asset investor benefiting from being exposed to equities and bonds. When we look at currencies, we saw a bit of weakness in the US dollar, which we would expect, but the pound really rallying up 1.8% yesterday. That's everything from us today. Thank you for watching, and we'll see you tomorrow.